If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, the podcast where we talk about business and technology. In today's episode, we're going to be talking about NIO. We're going to be talking about how September has been a huge month for the Chinese EV market, and October looks to be just as promising. What a fitting video. It's October the 2nd. So this is going to be super interesting, super insightful, super useful video. If you're new to the channel, make sure you hit the like button, the subscribe button, the notification bell icon, and leave a comment down below. Your engagement really does go a long way in helping out the channel. And so without further ado, let's get into today's episode. September has often been seen as a pivotal month in sales history for automobiles in the Chinese EV industry, but this year it was a lot more than that. It was an all-out sprint for Chinese Chinese electric vehicle companies. Let's start with the numbers because they're staggering. BYD led the charge, selling nearly 42,000 vehicles in September alone, which set a new record for the company. To put that into perspective, that's 45.6% year-over-year growth, and if they can maintain this pace, they're looking at 4 million vehicles sold by the end of the year. BYD isn't just leading the Chinese market either. They're expanding aggressively overseas with 33,000 units sold internationally in September alone. And it's not just BYD making waves. Li Auto crushed it as well. They sold 53,709 units in September alone, surpassing major luxury brands like BMW and Audi in sales last month. Let that sink in. A Chinese EV brand is outpacing German automobile giants. This isn't just a sign of Li Auto's success, but it's a sign that the Chinese EV market is starting to mature and take over the luxury space. So where does NIO stand in all of this? Well, NIO continues to hold its own in a very competitive market. In September, NIO sold 21,181 vehicles, maintaining its spot in the exclusive 20K car club. That's a 30% year-over-year growth, which is a positive signal, and it shows that NIO's strategy is working. But what's really exciting for NIO is their upcoming product launches. The NIO sub-brand Anvo made some noise recently with the L6 model, which began deliveries in September. While they only delivered 832 units last month, the goal is to hit 10K units delivered by the month of December. If that happens, it could push NIO's monthly sales over the 30,000 unit mark, which of course would be a significant milestone for the company. Let's not forget about NIO's innovation in building an ecosystem with things like NIO houses, which have often been criticized as capital intensive. But in reality, NIO's setting itself apart by creating a holistic customer experience, which could drive long-term brand loyalty. The shift towards non-standard commercial real estate in China, a trend where NIO houses are already leading, shows that NIO's already ahead of the curve. This is something investors should keep in mind when thinking long-term. Now let's zoom out and look at the bigger picture. Chinese automakers are not just dominating domestically, but also international. Leap Motor, for example, delivered 33,767 units in September alone, a record for them, and they've expanded into Europe thanks to a partnership with Stellantis. The global growth strategy is becoming a common thread for many Chinese automakers. But it isn't just about more cars being sold, it's about the luxury market being redefined. There's brands like Hongmeng Intelligent Driving selling at an average price of 400,000 yuan, higher than traditional luxury brands like Mercedes-Benz or BMW in China. That's a big deal because it signals a shift in consumer preferences. Chinese brands are now seen as high-end, not just affordable alternatives. So as a NIO investor, it's important to keep these dynamics in mind. NIO's not just competing with Tesla or legacy automakers in the West. It's up against fierce domestic competition that's innovating fast and expanding globally. However, NIO's strong brand identity and customer-centric approach and premium offerings give it a unique position in the market. Plus, with new and upcoming models like the Anvo L60 and expansion of battery swapping stations, NIO setting itself up well for long-term success. The market's clearly moving towards electric as the mainstream, not just in China, but globally as well. In fact, the China Passenger Car Association predicts that new energy vehicles will make up 52.4% of the vehicle sales in the coming months. So what's the takeaway? NIO's in a strong position, but the competition is real, and investors need to stay tuned to the rapid changes in the landscape. So what do you think? Are we entering a new era where Chinese automakers will dominate the global landscape of automobiles? And on top of that, will NIO stay ahead of the curve? I'd love to hear your thoughts. Leave a comment down below. As always, if you enjoyed this episode, don't forget to like, subscribe, share the video, click the notification bell icon, and we'll see you in the next installment of the Courtside Financial podcast. Thank you for watching.